Avanza is the leading online broker in Sweden with 1.8 million customers. They never had any ambition to expand into other markets, and the goal was to be the best broker in Sweden, which they achieved. They went from around 300,000 customers to 1.8 million in the past 10 years, and even doubled their number of customers from pre-pandemic levels. Average customer savings is 33,000 euros, and total savings capital is 59 billion euros. Estimated 20% of Sweden's population own shares, and Avanza got 70% of Sweden's population as their customers, which majority owns individual shares. So there isn't much room left for additional growth in the stock trading business. However, they started to focus expanding on the pensions market by asking people to move their pensions in Avanza by offering more competitive fees. Average annual fee on pensions in Sweden is 1%, while Avanza is charging on average 0.7%. Now that they have large customer base, they are offering them mortgages as well. It looks like they don't have enough own regulatory capital, so they are acting more like mortgage broker where the financing is from other banks. So margins will likely be very low for them, but it is just additional way to grow revenues without the need for them to commit any capital. However, in the current rising interest rate environment, I expect the growth in mortgages to slow down for a while. When looking at the entire savings capital market, which includes pensions, bank deposits, mutual funds, and shares, Avanza's percentage of Sweden's savings capital market net inflows has been constantly surpassing their existing market share, meaning if the trend continues, they will keep growing their market share. In 2021, they set the target to achieve 10% market share of the Swedish savings market, up from current 6.3%. However, in the recent years, large equity and mutual fund inflows was the main source of the growth, so if that trend reverses, they are unlikely to achieve the 10% market share target that soon. In the fourth quarter, they saw first time in a decade customers' funds net outflow. The outflows were mainly related to one of their asset manager client moving customer funds to its own custody. Without any one-off items, the capital net outflows were still 1 billion Swedish kronas negative. While the commission income fell in 2022 due to lower trading activity, it was still double the 2019 level. However, lower commission income was compensated by higher interest income. From January 1st, Avanza started paying interest on deposits in equity and fund accounts, and the policy is to pass through interest rates above their 1.75% margin to customers. However, that margin still feels quite high, so we'll see if there will be more capital outflows when the banks start offering higher interest rates for deposits. Net interest income supported their earnings in Q4 thanks to the Swedish central bank 2 rate hikes during the period. So far, the banks in Sweden are not sharing any interest on short-term deposits and keeping all the profits for themselves. However, at some point, when one bank decides to adapt additional market share and pass some interest to customers, others are forced to follow, so it is just a matter of time until interest margins will narrow again. When valuing the stock, I need to know customers' total savings capital, what percentage of revenue they can make annually against their customers' assets, what will be the long-term net income margin, what is the customer's assets annual growth rate, how will the revenue take rate from customers' assets change over time, and finally, how do they allocate profits. Then, as I estimate all of these metrics, I can put them in my discounted earnings valuation model to estimate the fair value and likely long-term return for the stock. Avanza's customer savings capital is 59 billion euros. As I explained earlier, after the record bull market and currently high valuations, I'm expecting zero returns from equities over the next decade. I'm assuming that the average equity valuations will be 10% below the current levels over the next decade, and after that the equities will start appreciating at 5% annual rate. Avanza makes on average 0.45% annual revenues against their customers' assets. Profit margins are currently on the high end due to recent explosion in trading activity and new customers, so over time, when trading activity slows down and competition increases, I'm expecting the margins to come down a bit, and I'm assuming long-term net income margins to be around 40%. As Avanza is already known by almost everyone in Sweden, and out of approximately 2 million investors who invest in individual stocks, more than half are already investing through Avanza's platform, so I don't think there is much room to take away competition market share in stock trading business anymore. Their customer base tilts more heavily towards younger generation, so if the next young generation starts investing at same pace as the currently 30-year-olds, it will lead to naturally around 3% annual customer growth. However, the new customers also bring less capital and less revenues to the platform, so the 3% annual customer growth should lead to around 1% annual revenue growth. Then, on top of the customer growth, there is still plenty of opportunities to grow in pensions, mortgages and deposit side, so I'll give them additional 2% growth on these areas, leading to a total of 3% growth rate from new customers. I'll expect this growth rate to be there over the next 3 decades. Then, the last pillar for growth is from existing customers' net savings. This will vary a lot depending on economic cycles and stock market performances. Also, as the 70+ years olds are the wealthiest clients, the total net savings rate will depend on how many of these investors will be taking capital out of their portfolios and how many will be forever savers that are going to die rich. Currently, average customer savings are still only 33,000 euros, so majority of the clients are at the beginning of their investment careers, and only modest capital inflows will make a significant difference there. I'm assuming average 5% growth from capital inflows over the first decade, which would average 138 euros per customer per month. Then, after each decade, the growth from capital inflows will decrease by 1%. If you have a different point of view regarding to capital inflows, let me know in the comment section. Then, there has been a long-term trend of trading fees getting constantly lower and lower, and I have no reason to assume why this trend wouldn't keep going into the future. So, I'll factor this trend inside my valuation model by assuming that the revenue take rate from customer assets will decrease by 2% annually. Regarding to capital allocation, they pay out 70% of net income in dividends. Rest is probably needed to strengthen the balance sheet to support future growth. I'll assume the dividend payout ratio to be 70% over the next decade and then going up to 90% after. I never expect the payout ratio to go all the way to 100%, as they will always need some additional cash for regulatory requirements. Finally, they do have 209 million euros of excess cash on top of their regulatory requirements. They will likely just keep it on the balance sheet to have some extra buffer for capital requirements and to support the future growth. However, if there are some opportunities, they could use part of it to do strategic buybacks or business acquisitions. So, as there is the potential to use it, I don't totally disregard the excess cash, but I'm going to discount it heavily by using 50% discount rate. So, based on these inputs, for a 10% discount rate, I'm getting net present value of just over 2 billion euros compared to the current market cap of 3.8 billion euros. So, from my valuation perspective, there is a 45% downside potential in the stock price. Also, note that this is a pre-tax valuation. To get the valuation for 10% after-tax return, you must deduct your tax rate from the dividends. If you want to calculate your after-tax return valuation, you can get quite close to the correct valuation by just deducting your tax rate from this pre-tax net present value. Currently, Avanza seems to be fairly priced for a 7% annual long-term pre-tax return. Hello there! If you want to see my full industry analysis of online brokers, well, I value 5 different companies and then I'll disclose the investment or trade that I made. Check out this video here.